How's it going today, guys? Welcome back to Stock Radar. I hope you're having a fantastic day and you've had a great week here. First of all, I just want to apologize. I know the lighting is kind of bad right now and it's a different location. I actually have a leak right now in the apartment, or in the ceiling of my apartment, and so where my desk was located had to be moved. And so right now the lighting I know is not optimal. I do apologize about that. I hope it's resolved by next week, but we shall see. But anyways, just wanted to mention that in case you're noticing a difference here in the lighting. But anyways, nonetheless, this week we're going to be talking about Applied Materials. They trade under the symbol AMAT as our stock to analyze. Now this is a stock I've been talking about for quite some time on my channel, and it was in my top 5 stocks for 2018, and it's just been a stock that cannot catch a break so far in 2018. They're down about 10% since I added them to that portfolio that I track the progress on every single month, and I'm going to be doing another update for that. Overall, the portfolio is doing pretty good. I'm up, I think, 14% with my picks. GE and Applied Materials being the only 2 stocks I'm down in, and then Chesapeake is up massively as the speculation. We all know Amazon is a beast, and Boeing is still doing pretty good, but they're still, getting caught up in some of those trade war fears with China. But anyways, Applied Materials is a stock that can't seem to catch a break despite the fact that they are performing very well, and they certainly do have some long-term prospects and growth opportunities ahead of them. So a little bit of background here on Applied Materials. First of all, as we said, they trade under the symbol AMAT on the NASDAQ. They have a price to earnings ratio of just 11.3. So when you look at technology stocks out there, it's very uncommon to find stocks with such a low PE ratio unless you're looking at companies like Applied Materials or Micron Technology. And we're going to actually look at their PE ratio during this as well. And that's a stock we've already covered here in Stock Radar. So if you guys didn't see that, make sure you jump back and check that out. Now, one of the things I like in particular about Applied Materials is they are a dividend stock, and they have a dividend yield of 1.8%. They have a 13-year history of paying that dividend, but they only have a 1-year growth streak. However, they did just double this dividend in May of 2018 from, I believe, 10 cents a share to 20 cents a share. And later on, we're going to look at their ability to potentially rise that dividend going forward and become really a great income investment, in my opinion. Applied Materials has a market capitalization of $46.8 billion, and because they pay that nice dividend, they are a growth and income investment, and this is a 50-year-old company. A little bit of background here on Applied Materials. They are the world's largest supplier of services and equipment for the global semiconductor industry. So if there are companies out there that are producing semiconductors, then odds are they are working with Applied Materials for their equipment and services. They are also a manufacturer of products for the flat panel display market. They used to be involved in solar panels. They're not involved in that anymore, but they are involved in the flat panel display market primarily for electronics, cell phones. So the key revenue drivers for Applied Materials are, first of all, smartphones and other electronics for their flat panel displays, as well as semiconductors. But they're not directly involved with either of these businesses. Instead, they are producing these services and equipment for both of these areas. So they're not actually manufacturing semiconductors or smartphone screens themselves. They're supplying the equipment, and they're helping these companies optimize their production. They operate under 3 segments. First of all, Semiconductor Systems, Applied Global Services, and then Display and Adjacent Markets. So let's go ahead and get a better idea about what each of these segments is. First of all, Semiconductor Systems is their largest segment. It represented 66% of sales in the most recent quarter, and this is the manufacturing equipment, products, and related technologies related to semiconductor systems. Their second largest segment is the Applied Global Services. That is 21% of sales in the most recent quarter. And their services, this involves the services and solutions for equipment optimization, fab performance, and productivity. So they're actually working with these chip fabs and helping them optimize them for performance and productivity. So this is the service end of their business. And then third and finally, the display and adjacent markets. That was just 13% of sales in the most recent quarter. That's their LCDs, LEDs, and display technologies for electronics. And this right here just gives you a better idea of what these things are and what Applied Materials is actually producing. On the top there, under their services, it says collaborating with customers to predict and solve manufacturing challenges, making their equipment and factories more productive. So they're helping make these chip factories run at a more productive rate. On the bottom left there, that is some kind of semiconductor machine, and on the bottom right, that is some kind of display machine for their display end of their business. So this is what Applied Materials is actually producing, is the equipment involved in this type of manufacturing. Okay, so now let's go ahead and talk about the current valuation of Applied Materials stock, and we're going to be comparing them to a number of different competitors out there. So first of all, we have Applied Materials, we have NXP Semiconductors, we have Micron Technology, we have Analog Devices, and then we have Lam Research. So we're looking at the PE ratio, the forward PE, the PEG ratio, and then the dividend yield. And we're also looking at what the analysts are thinking about this stock, just because I don't rely on what analysts have to say. But when analysts are recommending a stock, that is typically a good thing, because when analysts are going to upgrade, as far as their target prices go, or what they're believing people should do with that stock, whether it's a buy, hold, strong buy, that can be positive momentum for that stock. So I do like seeing analysts being bullish on this stock overall. First of all, Applied Materials with a PE of 11.3 and a forward PE of 9.7 and a price to earnings to growth ratio of 0.54. And keep in mind that when that number is below 1, that means that stock is undervalued based on the anticipated growth. And as we said, that dividend of 1.8%. So NXP Semiconductors has the highest price to earnings ratio. I'm assuming they just turned profitable, because that's a very high number. Their forward PE is a 14.2 with a PEG of 0.59. Now, Micron Technology, based on these three metrics, comes in as the most undervalued stock with a PE of 5.3, a forward PE of 4.5, and a PEG of 0.12. So based on those metrics, Micron Technology is the most undervalued stock. Analog Devices came in highest for the forward PE and the PEG. And then Lam Research is the key competitor here for Applied Materials. So for comparison's sake, I think it is better to use their numbers as far as the company that Applied Materials is most similar to. And so their PEs are relatively the same, 11.3 versus 11.5. Forward PE of 9.7 versus 9.8, again, very similar. However, Lam Research does have a lower price to earnings to growth ratio and a higher dividend. So if you're on the fence about these, I would definitely do some research on Lam Research, learn more about that company, and maybe you guys want to cover this stock in Stock Radar. I would be more than happy to do that. But anyways, do keep an eye on Lam Research. That is a key competitor to Applied Materials, and their valuation is very similar, with a lower PEG and a higher dividend. As far as the recommendation rating goes, they come in at a 1.9, which is leaning a little bit towards a strong buy. But the overall recommendation is that Applied Materials is a buy. And one of the most interesting things, in my opinion, about this stock is that right now, based on their analyst price targets, they have 49.5% implied upside based on what the stock is trading at right now. So on average, analysts expect this stock to be $67.23 per share. And right now, it's somewhere around $45, maybe a little bit higher, because I pulled this information yesterday, which implies just about 50% upside for this stock. And then also, the short percent of float is at 1.71. So oftentimes when we see technology stocks, you'll see a high short percent of float, meaning people are short selling the stock, and pretty much nobody is short selling Applied Materials, which in my opinion is a good thing. I oftentimes take a peek at that short interest or short percent of float to see how many people are betting against that stock. Okay, so let's go ahead and talk about the pros of investing in Applied Materials. And first of all, it is because you have diversified exposure to the semiconductor industry, because of the fact that they are supplying equipment for chip fabricators. The other thing I like about them is that they operate on a backlog for equipment. These are multi-million-dollar machines, and so kind of like Boeing, they know exactly how many they're going to be producing because they have orders for them. So they at least know how many they're going to be producing, and as such, they're not going to be sitting on a lot of inventory. So I always like companies that operate on a backlog. The other pro here is that 76% of revenue for Applied Materials is international, making 24% domestic. And so if you're looking to get more international exposure in your stock portfolio, Applied Materials is a great way to go, because most of their revenue is international, and predominantly this is coming from China. So this is just a couple of the companies that work with Applied Materials. We have Intel, we have Micron Technology, we have TSMC, which is a Taiwan semiconductor manufacturing company, and then right in my neck of the woods, Global Foundries, one of the other largest chip fabricators out there. And as such, you're getting diversified exposure to the semiconductor industry because all the different chip manufacturers are using the tools and equipment and services provided by Applied Materials. Another pro we have here is that there is an overall agreement that there's going to be growth in the semiconductor industry. And this statistic here is from Statista. This is China's discrete semiconductor market demand from 2008 to 2020. And this is in terms of billion units. And as you can see here in 2016, it came in at 152 billion units. And by 2020, they're expecting it to reach 190 billion units in terms of the demand for these semiconductors. So we are expecting growth in the semiconductor industry, which is going to mean that these chip manufacturers are going to continue to have to bring on new tools and update the tools that they currently have in their fabrication facilities. Another pro for Applied Materials is the fact that there is an increasing involvement of technology in products and in our daily lives. Look around at pretty much everything we're buying these days. There's more and more technology involved, and most of these technology products have some kind of circuits in there, and odds are those circuits were designed or built on Applied Materials equipment. And so this was often the problem with investing in stocks like Micron Technology or Applied Materials, is that there was traditionally a boom and bust cycle with this market because it's a very cyclical industry. And so we would see demand pick up and then the demand would collapse. And oftentimes this was because of innovation in the technology and also the fact that because of that, the prices were going down and down. So it was oftentimes very difficult to make money in this market, particularly looking at companies like Micron Technology when they're simply selling memory, and it becomes a race to zero as far as who can sell the flash memory and different types of memory the cheapest. But the one thing that we are noticing now is that because there is more involvement of technology in our daily lives and in products, there's going to be steadier, diversified demand for semiconductors expected. So I don't think we're going to see this boom and bust type cycle anymore. And we are also going to see strong demand surface in the automotive market. Pretty much every car out there, even if it's not, an autonomous driving car, does have a lot of technology in it. And they're pretty much becoming cars mixed with computers. I mean, I know even my car, at least, is a 2016. And, looking at the dashboard there, it's like looking at a little computer. So the amount of technology that's being involved in products today, there's going to be steadier, diversified demand for semiconductors. And I think that's something that's not being priced into today's valuation of stocks like Applied Materials and Micron Technology. Another pro for Applied Materials is the potential for rising dividends. Now, like I said, Applied Materials doubled the quarterly dividend this year in May. It went from 10 cents a share to 20 cents a share. But if we look at the coverage ratio, I believe that Applied Materials can afford to pay a higher dividend. And I would expect this to be a great income stock down the road as they continue to increase this dividend. So their 2017 dividend coverage ratio came in at 7.9 to 1. And even in 2018, their coverage ratio is still a 4 to 1. So they can very comfortably afford this dividend that they're paying out to shareholders. And I would expect that they're going to be increasing this dividend down the road. So I think this is going to be a very interesting income investment. And so this has a great opportunity for growth for investors and also for income. Moving on now, let's go ahead and talk about the cons of investing in Applied Materials. And the main one here is the fears of the boom-bust cycle of the semiconductor industry. As such, we talked about, the demand increases and then decreases, and advancements in technology make old technology obsolete. And also, like we said, with companies like Micron Technology that are actually selling memory, it becomes a race to zero. And you have to understand that Applied Materials is also going to be affected by this as well, because if the demand is drying up, then companies are not going to be ordering more equipment. And so Applied Materials is also going to see less demand for their equipment and services. And the other thing about this too is that the demand is largely tied to the consumer market, making this cyclical because of the fact that the semiconductors are involved in our technology products, they're involved in our cars, and those fall under the category of discretionary spending items. And so when we're seeing the overall market begin to retract, people are spending less money on technology and iPhones and TVs, and as such, you're going to see the demand start to fall. And so this is largely tied to the underlying economy. And then the other thing is, like we mentioned, Lam Research is the main competitor for Applied Materials. So definitely do your research on this stock. I hope it's one we can analyze here in Stock Radar just so we can compare these two companies and see what is similar with them and also what is different. Okay, now we're going to go ahead and look at the key financial documents here, starting off by looking at the balance sheet and looking at the assets. So total assets have been on the rise over the last 4 years, excluding 2015 to 2016, and total assets grew 33.3% from 2016 to 2017. That is astounding growth of total assets. Total assets grew over the last 4 quarters, but declined in the most recent quarter. Maybe there is some seasonality in play here with this business. Cash and cash equivalents have been on the rise as well, and total assets and cash are growing. And Applied Materials does have a large cash pile, and they've been investing a lot of money in dividends paid to shareholders as well as share buyback. So that's something I like to be seeing companies doing, is paying out dividends and then buying shares off the market, decreasing that overall supply. Now let's go ahead and take a look at the liabilities here. Total assets have good coverage of total liabilities at a ratio of 1.6 to 1 in the most recent quarter, and I'm looking to see about a 1.5 to 1 or above, so that is a check in my book. Current assets have excellent coverage of current liabilities, 2.6 to 1 in the most recent quarter. And then also what's interesting to note here is that cash and cash equivalents have complete coverage of current liabilities. So Applied Materials is sitting on enough cash to pay off all of their debts in the next 12 months, all of their short-term current liabilities. So Applied Materials overall has a great balance sheet and they have great coverage of their debts. Moving on here, let's take a look at the total revenue as well as the cash flow from operations. Total revenue has increased every single year at an average rate of 17.6% per year. Exceptional double-digit growth, almost near 20% of total revenue. And total revenue increased 34.3% from 2016 to 2017. Gross profit, on the other hand, increased every year since 2014 at an average rate of 20.6%. So when gross profit is increasing faster than total revenue, that means that cost of revenue is not growing as fast as total revenue, and they are achieving better profitability, which we're going to see with the financial ratios, I believe, on the next slide. Gross profit increased 44.8% from 2016 to 2017. And then the most impressive part for me here is looking at the cash flow from operations has increased every year since 2015 at an average rate of 79.2% per year. So we're seeing explosive growth there in the cash flow from operations. This is just fantastic for this stock to, number one, build up a large cash pile. Number two, be paying dividends and be generous with that share buyback. And over the last 4 quarters, gross profit and total revenue grew in each of those 4 quarters. This is an exceptional, income statement here. Nothing I can say bad about this, to be honest. And then here we have those financial ratios I was talking about. The current ratio is at 314%, quick ratio of 243, and cash ratio of 177. And as you can see, that's trending upwards. So this company has fantastic liquidity. Gross margin is up to 45% in 2017. Operating margin jumped from 20 to 27% in 1 year. Pre-tax margin jumped from 19 to 26. Profit margin went from 16% in 2016 to 24% profit margin in 2017. We saw pre-tax and after-tax ROE jump significantly as well. So this company has achieved a massive amount of profitability here compared to 2016 numbers versus 2017. So they're operating the business a lot more efficiently and generating a massive amount of cash from this business as well. So after talking about all of that surrounding this stock, you would expect this to be one of the high flyers for 2017 and 2018, but largely it has not been. So Applied Materials stock is up just 6% over the last year compared to a 24.2% return from the semiconductor industry. So they have significantly underperformed the overall industry. However, over the last 5 years, they're up 203.4% compared to a 164.6% return from the semiconductor industry. So they've underperformed in the last year, but outperformed in the last 5 years. So the other thing that I like about Applied Materials is that this is actually an attractive entry point here for Applied Materials. If you look at the stock over the last year, they have recently pulled back. And so if you are looking to enter a position in Applied Materials, this would be a good time to do it. I believe that stocks like Applied Materials and Micron Technology are still being valued based on the boom-bust fears of this industry, but I think there are enough different uses for semiconductors now that the demand is going to be stronger because it's more diversified. And so I think they are not being fairly valued by the market because of their past, and they're still being valued based on the boom-bust fears of this industry. And I don't believe that's a fair valuation for these stocks. So I think this stock has the potential to offer a higher dividend yield down the road, and it has growth potential as well. So I do think it is a technology stock with a low valuation that should be on your radar. And if you're invested in a stock like Micron Technology, you should also be looking at Lam Research and Applied Materials and be considering these stocks as well. And finally, we're going to wrap up here with some key financial notes from the second quarter of 2018 earnings report. They reported record quarterly revenue of $4.57 billion, up 29% year over year, so massive growth in quarterly revenue. Record earnings per share of $1.09 and non-GAAP EPS of $1.22, up 43 and 54% respectively year over year, so massive growth there in the earnings per share. And the most interesting part to me here is that $2.6 billion was returned to shareholders, including buybacks, equivalent to 4% of shares outstanding. So in quarter two of 2018 alone, they bought back 4% of the outstanding shares of Applied Materials. So they're being very generous with the share buybacks here. But anyways, guys, that's going to wrap up this video here. I hope you enjoyed it. We'll do a vote. I think we already voted for next week's stock. But weeks after that, maybe we should include Lam Research and see if we can get that stock on here as well so we can analyze that stock. But thank you guys so much for watching, and I will see you in the next video.